So I thought I'd just start with the alert that I put out, I think 2 days ago. And I thought I'd just cover how I find my alerts and what I look for in trades and why I took this one specifically. Um, so I was looking through some shit coins that I have on my watch list. So in this case, it was Algorand, Algo, and I've identified this long trend line, if you will, which was a downtrending support line for a long time. And back in December, it finally broke through that. We were now seeing it coming back up to test that, while also being in a relevant fib level for me. So I always draw my fibs from when I look for continuation, I always draw my retracements from the bottom to the top. And then you get this golden pocket here. So you got the swing low. I identified this as a high. I mean, it's a bit iffy, but it felt the most relevant to me. And then you get this golden pocket right here, the 618, which lined up very nicely with that trend line. So this trade setup was essentially, I wanted to see it reject here, which it did, and then it had some bit of sideways action. Essentially, I wanted to see it fall below the lows that it was making here, which it actually did to start. And then I said the entry was on a retest. So around this candle basically was entry. But then it actually came quite a ways back up. But this is why why I always alert the stop losses to be like well above the wick highs, because it came really close, and we stuck in it, and now it's up. I'm up already 3% realized on the account. It's looking really good. It is, slowing down a little bit here around this 18-cent mark. So I have already taken decent profit off the table and moved my stop loss down, so I can't lose on this trade anymore. But I'm just gonna watch and see what happens here, because this could see another bounce. But I'm definitely holding some to take it back to these lows, like this area here, the 17.6. These highs here, where you got the point of control and the like the highest volume area on the VVR, which correlates to these highs, and then you got the low, and then the way I play these, when I pull my my fib retracements like this, and you get a rejection in that golden pocket, so the 618 and the 66 fib. Once you then break the 1 fib again, you're often very likely to move to the 1272. So that's like my final target for this short. They'll all be mostly out by then. Yeah. We're actually seeing a thing here as well on Gala, and I might actually pull this on a different chart. Just get rid of it. Let's do that. So what I'm looking at here is we got a very big dump. I got some old trend lines here from a falling wedge that was forming, but it invalidated that, broke below, and dumped quite a lot. But what we're seeing now is actually quite a strong uptrend, but you can see very clearly that while it's very much trending up, making higher highs and higher lows, you can see that RSI is actually making lower highs, meaning we get RSI divergence, or bearish divergence in this case, which generally means that the move is running out of juice, and you can expect at least a pullback, if not a reversal again. And in a strong downtrend like this, I would generally definitely look for some further targets here. But then again, I would take my fib and I would pull it to up somewhere like this. Yeah, it's kind of, it's not really an exact science. I just kind of do what feels right. So sometimes I grab like the breakdown point, where the big moves really started, and then it lines up somewhat, or I can grab the higher highs here, and then that's where you get your wick. So it's not really an exact science, and like most fibs just work. This is the most logical one. You get your most recent swing high and your main low. Got a wick to the 618. Um, but if I pulled it from here, the initial drop off, then my 618 is actually what's holding up that area there. So it's, yeah. I generally just do whatever feels right in the moment. You don't have to do it perfectly. It's just um, nice way of looking at it. Yeah, this essentially tells me that we're slowing down, coming into a very relevant place to be rejecting. Um, which then, if we zoom in a bit, we could start saying, well, we've got these highs here, right? This line. Right, actually, let me just do it like this. So we've got this area here, 18.6 to 18.4. That's what's holding it up right now. There's also kind of those highs there, a bit of the lows there, so it's very much a relevant level here. And you could essentially start saying, get below the 18.4 level, so maybe wait for a bit of a retest there, and then you can take your entry here. And you can trade that back down. You just look for all these lows, so these lows in the uptrend where price seemed to, or the highs where price seemed to stop, right? And you could use all of these as potential TPs. So just keep those in mind. I would generally say those three would be relevant. Another way of getting those TPs and maybe a bit more accurate is by using the fib extensions, and I think I touched on these last live as well, but if I go on a higher time frame, I could take I could use that. It's, again, not an exact science. This is exactly the easy chart to do it on. You can see when I pull this and I get rid of all my other doodles and that other fib, you can start seeing that we get actually very similar levels. Again, this low here, these highs here, it's a bit different, but these highs here. So you can see the fit, it generally trades between the fibs. It doesn't have to, it doesn't really matter that much how you draw them, except when you want very accurate targets. But in this case, I could just consider each of these a profit target, and I would just assign relevance to them based on how much confluence there is. Let's say a 0.5 of extension, but it's also like it bounced there a couple times. It's all right. I would probably take some profit there. Another way I check would be just pulling a regular retracement. You can see these highs. This is where the golden pocket is, and generally when you see, rather than a reversal but upside continuation, it again comes down to that golden pocket. So in this case, breakdown, retest, get your entry around here, take profit, right? That would be like the main target, and anything after that is pretty extra. And you could simply set your stop loss right above there, right above that purple zone. Essentially, you get above these wicks, and above whatever the retest high was, and that's generally a pretty good risk to reward trade, I find. So that's we can write that down essentially as a trade. That would be Gala below 1.8 cents, 184. Entry on the retest, targets down to 17.8. and then, you know, just whatever extension you want to 17.3, 16.9, and then you could talk about your getting your lows again and going further than that. If you want to go for more of a swing, a long-term trade, then again you would take this fib. You could say when it does break, when it does get below like these lows again, well, so say below these lows, then you're definitely probably seeing further continuation. You could take your one fib, your current low, and your 1272. Well, that's not as much of a common way I would pull these. I generally just take around the top and then size out my position from a previous trade and then hold it as a swing. So I have like the algo trade, for example. I open quite a large position, but I'm closing most of it in these areas up here, but holding some like it's a swing trade, just with stops at break even and just holding it down to the low and the 1272. As because even those even if it's like a few percent of my original position, that can be like another couple percent on the account if it does hit, and that's very welcome, if I do say so myself. Another coin I got in my watch list here. This is Quant QNT. I identified a big ass Head and Shoulders here a little while ago. This isn't as relevant anymore, but yeah, big Head and Shoulders. I'm not that much of a pattern trader generally, but you know, it's staring you in the face. These are generally just topping patterns, right? So when you see price come up, make a Head and Shoulders, it's more likely to come down. So essentially what I'm looking for here is pretty simple, is a break of $100. Entry on retest is always just the safest thing because it lets you set a really easy stop loss, right? Because generally if you get a break, a retest, and it comes down, it's not going to come above that wick before reaching further down targets, right? It might on a reversal at some point, but even otherwise, if this comes down here right now, if you want to swing it more, if you want to reach for these far targets, because this is setting up to be like, you know, a $40 move. You know, it's like it's like a 40% unleveraged kind of move. You could definitely just take a smaller position size, set your stop loss like above these wicks or above these wicks, and try to play it that way. Yeah, this is a very, very like big pattern in that it's like you can obviously see it on a weekly even. So if this does play out the way I think it might, that's going to be a very lucrative short. Let's actually have a look at Bitcoin. Yeah, there's not much to say here. It's kind of just been sideways the entire time. I don't think anything's changed since the last time I was live. Yeah, it's still just below 16,000 or above 17.8 is where I expect, like, that at that point things might start happening again on Bitcoin, but until then I'm not really too interested in trading it or doing anything with it. If we start getting above these highs here, though, that's going to be very interesting, as that might be indicative of a greater bottom, you know, that we might be able to actually call a bottom, or at least call this a macro low. But I still believe it's more likely that we trade down, even if we do actually come back up here for a bit. Just reject there, hit around somewhere between 14 and 12k, and then put in a greater rally. I don't think it really has the juice anymore to continue down. And again, you can see that if you pull up the RSI, we got big bullish divergence this time, with RSI making higher lows while price is making lower lows. This also applies to other momentum indicators. So I have the Joule light here, which is like a combination of a bunch of momentum indicators, and it works the exact same there. In that, again, you're getting higher lows on the indicator while price is making lower lows. Generally, just a bullish sign that there's not that much more down to go. I think I said this last time as well, but I think we're pretty close price-wise to a bottom unless we get another black swan. It just might really take a while. I mean, these previous cycles as well, like from the low to getting moving again was like 4 months essentially. Really starting actually making a higher high took 5 months. Making a new all-time high was 2 years. So it's Bitcoin is very much a long-term thing for me. I'm not too worried about trading it that much right now because there's more lucrative things to trade. But long-term, I definitely want to stack loads of Bitcoin. Let's see. Here we got DOT. This, like some of the other altcoins, is actually putting a bit of a rally here in the last few days. 6%, but something. But yeah, it's DOT's not looking too hot. It's just slowly been dying, and I mean there could be some signs of a bit of bullish divergence. Yeah, it's not really. This is just bleeding out, and as much as I like DOT as a project, it's just not looking very good. Let me actually pull up this chart. That's maybe a bit better. What I've actually done here earlier was pull a fib extension just from the macro high, like the high from November to the first major low, and then the first major bounce high. And you can actually see we're reaching a pretty relevant level here. I actually bought some a little bit ago around this $4 mark, because that is still the point of control. That is the 1272 extension. That's basically where price was traded here back in October before the major run up. So this is definitely a relevant level. If I want any hope to be there for DOT, I kind of just wanted to see it just either put in a greater bounce or just move sideways from here. I'd like, if it continues doing this, yeah, that's not going to look good. That's just going to be a slow bleed, and that's kind of the price action you see for coins that go to zero. In the end, like the shitcoin price action, and that's not what you want to see if you want to buy a coin for the long term. I think ETH is pretty similar to Bitcoin right now. It's not been doing that much. It has a bit more interesting price action, and then we got a bit of a wedge here. So I drew base support here on ETH from this wick here, crossing the highs, and then where we bounced here. It's kind of just been holding that for like the last few months, which is good for ETH. It's again a kind of a no action area. Like I'd want to see a break of this, probably see a bit of a retest and take some nice shorts down, or just see a break up, and then maybe I can buy some spot. But I'm not too concerned with ETH. The same as with Bitcoin, just nothing's really happening on it until this like breaks below 1120 or over 1500. I'm sure you can trade it on the lower term time frames if it is making rallies up to 1500, but again, I'm just not too concerned with ETH right now. Matic has been a bit more interesting. recently, and this is actually setting up for a big dump as well, like 50%. And I think we'll see that at some point this bear market, because this is very much, we got you saw from the bull market, this was a topping pattern, very obvious. You get your fucking break there, goes to zero. Not quite, but it just nukes down. And then we get a big relief rally. But again, we come up and we're just going sideways and uh, essentially forming a topping pattern as well. And it's not so hot looking. I don't really want to buy any Matic when it looks like this. It's kind of just this very obvious line here. So below like 73, 74 cents, there's just not really much holding it up at all. You can see that on the VPVR here until 60 cents. There's really nothing there. So that's kind of my target. So break below 73 or 74, something like that. There's always retest entries are the safest, but that would be a very quick move down to, or I say quick, a very easy move down to 60, 59 cents, making for a 20% like dump. That's substantial. A lot more substantial than anything I could say about Bitcoin or ETH right now. But yeah, if it doesn't break down here, again, very obvious level above 95 cents. And then um, Ape Con. So I was actually looking at shorting this around here, and it's actually I only actually just noticed that fucking line right now. So that's actually a really nice setup. We got I was following this big channel here, and I took a few shorts when it reached the top of that channel, right? So using the same concept of the RSI divergence, I would actually zoom in here, going on the 15-minute. So what I'd do is I'd see how price is reaching the top of my channel here. I'm getting bearish divergence. Once I see a spot weakness in price action, I take a short. So I did it on these two. So very obvious bearish divergence. Oh my god, I'm sorry. Yeah. Thank you, Blasm. I didn't notice. Yeah. So what I was saying here on Ape, I use the same concept with RSI divergence here to catch a few shorts in this channel. So back here, early December, I found that it made a big dump, and then it made a rising channel. And generally, when price dumps and then goes up and sideways, it's downward continuation. Or if it dumps and it's down and sideways, it generally means a greater bounce. Granted, this doesn't always happen. Like I was waiting for it here. I was holding runners, but it broke through the channel, but it never really lost the 350 level after that. So it 3550, I should say. But I still took it twice from the top of the channel down to the bottom, and it's just these are super easy trades because all you do is you see this big RSI divergence there, three drives, right? So you get there, and then there. Okay, great. You can see that here as well, continuously making higher highs. Fantastic. And then you can very obviously see where you get this weakness in there is below there, right? And you get this big red candle. I think I actually front ran it a little bit, but like this would be a very obvious entry candle, even if it is quite a dump. I mean that's beautiful, right? And you just set a stop loss above the wicks here, whether that's 1.4 or 1.6 is up to you. But then you're guaranteed like a 2 risk to reward. It's just easy trades. Same thing here. I mean, it's not quite as much in terms of bearish divergence, but it definitely wasn't looking bullish coming into this top of the channel essentially. So again, saw weakness here coming out of this, and then took it down from the around there down to the bottom part of the channel, and then I think I stopped out break even or something on the remainder of my position, or I took it in profit. I'm not too sure, to be honest. Yeah, I tried to play the breakout here as well, but I just got stopped out for a little bit as it did not want to play. It didn't want to go down, which was too bad, you know. But it doesn't always happen the way you want it. But I still made good money. Then we got a big rally out of that. Came back into the channel, and then actually just like faked out essentially. It tried to break out of the channel. That was also right around this resistance line, which I actually only just found while I was doing this. Which is actually a very good sign. Also, there's massive bearish divergence there on the hourly. Like that's ridiculous. To 88 and then down to fucking 80 when it was substantially higher. Like that's I wouldn't get in on it right now, but this would be a very nice level to maybe catch it like around here. If it comes back that far, that would be a very nice entry for like a big ape short, as that still makes for the for a lower high, though it is back on like the support area, which I don't particularly like. But I would say like either getting a rejection on that line again and entering around there, stop loss above the highs, or waiting for it to break below there and then you can try to catch it down there, as then you don't have the support holding it up from back here. What else do I have here? I have Adam. Adam again. I mean, this is actually on an hourly, so that's something you can do something with pretty soon. Yeah, I wouldn't actually call that a trend line yet. But this is also kind of topping out, but yeah, I think there down to the point of control. So break below there down to around here. That's most likely if we get further downside. I'm not too certain about this one. It could, but it might just hold around here. It's very straight line down. It might just hold and continue back up, because that's also very possible. This might be actually, if I were to pull this, yes. So this again is that pulling my one fib from the top, and then I grab, in this case, I look for a more recent low rather than the more major one. And this is just a strategy I've been using for trend trading. So essentially you break a high. In this case, we broke above this area here, right? And then you come back to test that area as support. You take entry around here on like a bullish engulfing candle, or just bullish price action, or seeing that it's bottoming out right around there. You could take a long in this area, stop below the wicks, below the fib, whatever. Take it up to the high and the 1272. So that is a very decent atom setup there, and these are always very good risk rewards. So if I were to pull my long position here, say I thought it looked bullish around here, my target 1, my stop loss in this case would be a 1.5 risk to reward to target 1 and 3 to target 2. And they generally have a pretty good hit rate, because as long as the trend continues, right, trend is your friend until it bends. So generally they have, that's why it has a pretty good hit rate. You know, you're just playing the trend with a good risk to reward. You're not trying to like take longs when it breaks this high or whatever, then you get into all kinds of issues. But that's generally a pretty good way. If it isn't going to follow the trend, then you'll know pretty quickly and you'll be out for minor loss. Whereas if it does follow the trend, which is a lot of the time, you got some extra money. Though I do have to say, there is some, there's of course some bearish divergence there, but that doesn't mean that it's guaranteed to come down here. That could just result in a bit longer fannying around this support level. Because while yes, it is bearish divergence, I mean, this move here could have been all that comes out of it. So again, trading is an exact science, but like just doing a lot of it, you'll start like getting a feel for it. And the things I'm doing will make a lot of sense if that yeah. You'll start understanding how markets move, and that makes this a lot easier. Is there any specific coin you guys want me to chart, or do I just keep going through some of the ones I got, or how I would actually find which coins I'm going to trade if I'm not just going through a watch list?
I'd be interested in knowing how you find coins, because I've just been looking at hot pairs and volume and crypto bubbles. Like, you know, I'm getting desperate. So yeah, I'd like to do that, mate.
Yeah. So that's I mean that's pretty close to what I do. So in this case, you know, I have a bit of a watch list. I mean, most of this is just major coins I might have some interest in, or I've been trading a bunch, right? But generally, I just go to Bybit, and what I do here is I just go to USDT perpetual and I sort by like what has moved. And in this case, while if we check Bitcoin is actually flat or down a little bit today, you can see. Then I look for what's up today, right? And in this case, Gala is up 7%, has 33 million in volume, so there's people trading it. So then I go on Gala and I just open up the 15-minute chart, and I see if there's any trades to take. I mean, in this case, I don't think there's really anything to take, but I just essentially go through like the top few coins here. Actually turn on 1272. Yes, so I just go through the top few coins here. So I also here again, you break this high here, right? Come back down around the 618. It went a bit further, but then here got your entry, take it to the high 1272. But in this case, I was a bit too late to catch something like that. That's a pretty easy setup that I've been playing around with. But then again, if there's nothing on Gala, I would open Ocean. I mean, generally, I never want to chase green candles, so that's kind of the only issue with what do you call it, with using like what's up the most today. But I generally just want to look through. I generally just look through the big coins, the ones I usually trade, or the ones I usually keep up with anyways, right? And then look through whatever's up a lot or down a lot. So like this is a random shit coin that's just started trading. This is moving a lot, and I just look for these kinds of setups that I've been going over, on these coins, and I just try to essentially scan the market for setups. Like not spending too much time on anything, just giving it a quick look, seeing if there's anything worth trading. So in this case, big dump. Could see like a mean reversion. Now I don't actually, generally when I trade, I use things I've tested. So for example, the thing that I was showing off with the breakage structure, the pulling your fib, getting the golden pocket, bounce off there. So I've like gone and tested this stuff, right? I've made proper strategies for this stuff, and then seen what the result was. So in this case, this was on Matic on the 15-minute. What happens when I use this with a few specific things, right? Like I got some rules to it. How do I take profit? Where's my invalidations, etc., etc. But that had pretty good results, right? So this is since the 11th of November through to the 1st of January, and that was that basically doubled the account. Just taking this strategy, and this is I'm using the risk to reward. I'm using a bit of a I guess weird ratio to calculate how much leverage I'm using. So if I got a good risk to reward, my sheet will tell me to use more leverage. Whereas if I got worse risk to reward, I'll use less leverage. And it's kind of worked out. Or if the stop loss too big, it'll like cap it out. But that's kind of how I use this stuff, and it's I guess that's a bit of risk management. But it also means that you get these trades where if you got good risk to reward, all of a sudden you get 10% on the account in a single trade. Or here, this wasn't actually that big of a move, but it was a really good risk to reward. So it well increased the leverage. By the way, this is the leverage here. This is the amount of times my account. So here I'd have 3 times my account. So if I had $1,000 account, I'd have a $3,000 position size. Or if I had with this one, I'd have a 1,600 or an 1,800, 2,500, 2,100, etc., etc. Right? It's just the amount of times my account rather than worrying about being on the actual leverage, because I always just stick on 10%, because that makes it easy to calculate, right? So I could just say, if I wanted to say long this shitcoin, if I said 10%, I'd be on 1x my account, right? If I'd be on 25, I'd be on 2.5x my account, 5x my account, 7.5x my account, or 100x or 10x my account. Oh my god, it's pumping. But yeah, I try to keep it simple and just increase position size based on my maximum risk. So if I wanted to long Atom here, for example, I'm on a 4 hours here. So if I wanted to enter here for whatever reason, which I don't, by the way, definitely don't want to, but like a 3% move to my stop loss, I wouldn't want to be, I wouldn't want to be any more than 1, maybe 1.2x my account or something, because I don't want to be losing, too much of my account on a single trade. So I generally absolute cap is like 5%. So if I risk 5% on a trade, I just lower the position size so that I still take the trade, but I just always make sure it's below that 5% mark, because at that point, if you start taking 5% losses on every trade, then you're just working against yourself, and it's kind of hard to, if you get like a losing streak, it's hard to dig yourself out of a hole when you keep losing 5%. And 5% is already on the high end, by the way. I generally look for like average 3%, maybe. That's generally what I'm comfortable with. Though this depends trader to trader. I know people who risk way more, but they do like long-term swing trades, very high conviction or whatever. Then yeah, it's a different situation. Like here, for example, back here in May when I was looking at Bitcoin, I could almost guarantee you that when we broke this, that we were coming down to this and even lower, right? But I didn't swing trade. But like people who do might actually risk way more than 10% of their account on a high conviction trade like this, and they'll make like 30%, right? But when we're scalping, we're not going to be making insane percentages on every trade. So we try to keep our losers low as well. In this case, right, it would be something there. Yeah. Let's actually have a look at some Bitcoin pairs. Okay, so looks like ETH BTC is breaking its downtrend line, which is a good thing for ETH holders, which again might lead into that, if I duplicate this, because I mentioned this move up to, that ETH could make a move up to like 1,500, right? I mean, at least 1,400 while still being in the range, but just that move up to 1,400 while Bitcoin does little, that could, this could be like an early sign of that. But essentially, this is just ETH divided by Bitcoin, in case you didn't know. So it's, you can chart this to see which asset is more likely to outperform the other one. So when ETH BTC is very bullish, it doesn't mean Bitcoin's going to do bad, but it means that ETH is likely to do better than Bitcoin. So in this case, we're seeing on the daily, we have a big breakout candle, and then we have a consolidation candle. So generally, when you have a big blue candle or a big red candle, and then just get at the top here that little uh, nubbin there, that generally means you just get like a candle of consolidation and then see some more upside. Um, but it could also generally turn into this. It's kind of it's I find it's generally more bullish, but yeah, I'm just looking at the breakout here, and I can honestly pretty easily see a move back up to 78 or 78, which would be a 5% gain against Bitcoin, 4% from where ETH is at right now. So if you already have, if you're already like largely invested into ETH and Bitcoin, this is something you can play around with uh, by swapping between them. So I know a friend of mine used to hold a lot of Bitcoin, and he would trade against it, and he would always swap between ETH, BTC, and BTC, and he'd just get more ETH and Bitcoin because every time it went up, like he didn't want to really get out of crypto because it's his long-term stack. Um, but by swapping between them, he could still grow that stack without investing more money. Yeah. ETH BTC has definitely been in a range here for a while though. When do I have this vid drawn from? Oh my god, that's long. Um, yeah, we got our lows here around 66. Yeah, this move could like the next target is 7-8, and then probably if it keeps going after that, I'd probably have to revisit it, but could easily see a move back up to those range highs, which would be 10% against Bitcoin from where it's at right now. It also is in line. You got nice little wedge. A wedge with a topside breakout. Probably see something like this, come back down and maybe move back up, and then yeah, I don't know about that last part, but I expect this to just take a minute, but trade up to those highs. BNB BTC, so this is Binance Coin versus, or Build and Build, I think it is what it's actually called, but Binance Coin against Bitcoin. This has been incredibly bullish for like its entire existence, or at least since it's been trading on Binance. It's only really had a downtrend here during September and during 2019-2020. Yeah, it's still very much uptrending, and it's not really telling me that it's gonna stop. There's no it like this might still form a bit of a topping pattern, but I don't like it's not saying that it's gonna fucking just dump from here, and I don't see why it would. And it's got a big support level here as well. So like worst case, what are we looking at here? If I do that, so I'm expecting this to at least continue up to 24, and that would be a very nice place to maybe top out, relax for a little, But you never know. With BNB is a bit iffy because like they just buy their own coin, so it's kind of a fucking Ponzi scheme. As long as people use their fucking exchange, they'll keep buying their own coin. Which is probably the reason why it has performed so well against Bitcoin, even in the bear market. It is also why I'm not too quick to say that this is just going to dump straight to new lows, whereas Matic might, Matic might as well just come back down 60 cents, 35, and lower, right? Matic BTC has actually been pretty solid as well for like the last while. It is, however, coming into these highs right here. Um, nah, that's not the one I wanted. I wanted that one. So that is something it's going to have to get through if it wants to uh, continue being bullish, or at least better than holding Bitcoin. But yeah, I think it's not quite bearish divergence so much. I mean, this was definitely, but that played out. Yeah, this does not look particularly great. So most likely, like, it doesn't look like it has the juice to really bust through this right now. And that kind of lines up with the chart here, setting up for a big move down. That translates here as well in that is kind of losing steam here, going into a major support, resistance area. So I would honestly say it fannies around a bit and then comes down. There's really only two levels here, like the middle area here, around 33, 4 zeros in front of it. And then the lows again here, 24, 25. Yeah, Matic probably has a lot of falling to go here. Why do I have this in here? That makes no sense. I'm pretty sure that's supposed to be in there. Yeah. S&P. Yeah, it's basically been doing what I thought it would, which is very slowly working its way down. In this case, it had some bullish divergence here coming into these lows, and that played out, taking us back to the high here. But you could actually pretty much see that as bearish divergence again in that. Oh, why is it not letting me go out? Hello? And that this high is way lower than the other one. I just already got it marked up. So that's again bearish divergence that played out. Then we got bullish divergence again, and it's just slowly working its way down. So this bullish divergence, then we get a big leg up back into that support, and now actually holding here a little bit, kind of expecting it to just work its way down slowly. I don't think the S&P is bottomed. It just doesn't make much sense. And we're still yet to go into a recession. That's going to happen pretty soon, though. Probably Q2 next year. So we'll actually see a recessionary period, which then gets inflation under control, but then people complain about recession, so the Fed prints more money, which gives us hyperinflation back. And so is the cycle. Yeah, Dixie's, I mean, I think I drew this last time. It's been very bearish for like the past, since October. Most likely going to see a bounce somewhere around here, or at least some things. I don't think this uptrend's over. Like, yeah, I don't think this is the top for Dixie. Euro as well. I mean, Euro had a big rally out of that Dixie dump, but most likely it like retraces here. If it wants to be bullish, very simple. Again, get the retrace here. Hold this $3 level, $25, whatever. And then continue up, and then that 1272 is in line with that the long trend line I got here. It's a bit off, I guess, but a central one I've drawn leading back to July 08. So that lines up pretty nice for bullish continuation. And after that, it's just reevaluating, seeing how it looks at that point. I'm not going to make any calls on whether the euro continues even further up than that because I'm not a fucking macro expert. That's not my job. By the way, this is a very simple chart to understand why I don't think markets have bottomed, or specifically the S&P. So this is U.S. money supply. We did not bottom yet, in my opinion, Blasen. So for Bitcoin itself, I think price-wise, I think we're pretty close. I don't think we're going that much further down price-wise. I think S&P has a bit further to go, like 3,400. Oh my god, I'm muted. Fuck's sakes. So I do not think we're bottomed yet. I think Bitcoin's close to being bottomed price-wise, just not time-wise. I think it's going to take a while before Bitcoin actually gets going again. I think S&P needs to come down more, like 3,400, and then that'd be a pretty nice place to find a bottom that's like around base support. Yeah, this is a very simple chart to understand why it wouldn't make much sense to have a bottom right now, and that is this the U.S. money supply, right? So this is all the basically all the money in the system, if you will, and basically the entire existence of this chart, leading back to 1959. It's been an uptrend. It's never decreased until now. Now, like all these market cycles, right? You got fucking the 2000 bubble, the 08 financial crisis or whatever. All throughout this time, the money supply was rapidly increasing, right? And it continued doing that. This was actually here the start of the 2020 boom, essentially. So, let's see, October. So a bunch of money came into the system, and then immediately October we get a big bull run. Like all the money and fucking the dollar increases by 20%, and all of a sudden we got crazy high prices. Who would have seen that coming? Yeah, for the first time ever, this is actually decreasing. So the amount of money, the amount of money being printed, is actually decreasing, and money is being burned essentially, for the first time in history. And I think that's going to have a very interesting effect on markets. Yeah, I have a very simple approach, and that is I'm slowly buying some Bitcoin. I have someone asked me earlier. I have like 15% of my portfolio in crypto right now. However, with income I receive from various sources, just work income, that rotates back into my portfolio, so that's going to decrease that percentage again. But I generally aim to keep it around there and just DCA very slowly into crypto until we get like a definitive bottom and we start seeing actual upside again. And then I'm looking for like 140K next cycle for Bitcoin. I think that is definitely not going to be that difficult. If there is another cycle, of course, that's always the question. But yeah, I don't think it's going to be that difficult to get 100K, 140K, 150K, whatever, next cycle. But yeah, I'm just slowly buying, and until then, I'll just be trading. It doesn't matter whether things go up or down. For alts, like so, ETH would be the first next thing I buy next to Bitcoin. I don't really want to buy any ETH where it's at right now because it is, while it is on support or whatever, it is also um, it's only down 73%. And I honestly, I want 3-figure ETH ideally, and I think if we do break below this line, that's going to be a lot of bleeding, and I don't want to fucking lose 50% after I start buying. So either I'll buy when it's further up or when it's further down. For most alts, I actually won't touch them. So like Gala, I like Gala as a project, right? But this is the chart of a shitcoin, and I wouldn't touch it with 10-foot pull. I do not want to hold Gala because this might as well just go to zero. And this goes for most alts. So if it's not a top 10 coin, and even if it is a top 10 coin, you still got to evaluate. But if it's not a top 10 coin, don't even consider buying it anytime soon. And for coins like these, you just buy them at the start of the bull run, right? When you actually see things get going again. When Bitcoin gets going, there's always a lag. And I don't know if I showed this last time, but so this is Bitcoin on the weekly. And if I were to, say, overlay the ETH chart, like time-wise, ETH made similar moves, but ETH didn't get going until a few months after Bitcoin did. And yes, ETH's gains were much bigger, but you could have taken, right? You could have taken this entire move on Bitcoin, right? From here, I guess. If you caught that breakout, you could have taken that entire 400% move and been using the profit you got to get into ETH and then taken that entire move, right? So there's always a delay between alts and Bitcoin. And I don't know if I've actually posted that in this Discord yet. I think I posted some stuff in resources. Where the fuck is it? And I was muted on the recording. Fantastic. So yeah, you go from Bitcoin into ETH, and then into your Bitcoins, your top 10 coins, maybe top 50. I don't know what you consider large caps, but and then you'll get into the retard mode. So this was I think last cycle we didn't have as much of an alt season, but we had pumps everywhere, and we mostly in the gaming space. So for example, Gala, like I had here, right? Gala went absolutely vertical. I mean, literally, it was a couple bars. So it went up 3,000% on Binance alone. Um, Axie was another very popular one. Fucking launched at 10 cents on Binance and ran up to $166. Right, so this was how we had, I guess, our alt season last cycle through gaming coins, and I'm sure next cycle there will be a different narrative uh, to hop on. But generally, I would say right now, just wait. Just slowly get into Bitcoin. Look for the market to bottom, I guess, and then start of next bull run when you see actual Bitcoin making moves again, uh, price them moving into ETH, and then you look essentially just keep up with popular narratives, and then just throw a bit of money at any of them, right? Because Axie here, like if you got into these sales early, I mean, this was like the top day after launch. I mean, this was granted a year, but that was a 27,000% move, and that was just buying it on spot, right? And these are the kinds of things. I mean, if you threw fucking $20 at that, you could still buy a hell of shit, you know. Like that is the 280x. Yeah, that's I'd still say that's quite substantial if you only had a couple bucks in there. Yeah, yeah. I'm just rambling now. Was there any questions you guys have? Anything you guys were wondering about? Anything I might have been too unclear about? I think that is a no. Um,
That was good to see, mate. Thank you.
yeah, right. I think I'll end it off then with the total. So this is on TradingView. You can get, if you look up total 2, and total 3, you can essentially chart the entire crypto market cap. You could actually see that looks quite similar to Bitcoin, but you can actually see it's still holding the all-time high there in terms of market cap. It had a big topping pattern, came down, and are now actually bottoming out a little bit. So it's going to be interesting to see if we can hold that, because if we can't, I mean, that's next levels maybe around here, more likely there, you know. So let's say around 380 to 440 billion. So that's like cut the crypto market cap in half. So this is all crypto combined, right? Total 2 is a similar thing, except it's without Bitcoin. This is a very similar chart in that it's also kind of holding, but I think this is much more likely to just break through and just wipe out a lot of value in terms of market cap here, because generally during the bear market, during extended bear markets, money continues to drain from most altcoins, much more than Bitcoin. So we could very easily see a move back down here, another 44% down, and that's like, or 45. That's off like basically all the altcoins. So this is the entire market cap without Bitcoin. And then the last one here is total 3, which is the entire market cap without Bitcoin and ETH, and that is actually already showing you this. What I was talking about here, in that it's already breaking below your previous all-time high here. While the chart's very similar, this again is it's broken that support, and it's honestly very likely to make this move down, and that's 42% off all alts essentially. And that doesn't mean every alt goes down 42%. That just means that 42% of the entire alt market cap uh, gets destroyed, meaning, you know, some of the top coins, let's say ADA, I don't know how much that is right now, but say ADA goes from a 9 billion market cap down 30%, but Polygon goes down another fucking 80% or whatever, right? That eventually leads into cutting that market cap down by 42%. And I'm sure a lot of these coins, that's what, like, if there's any coins you want, just don't, like, if they're not year, most of these will go to zero, right? These won't be here next cycle. And we'll have more different shit coins. I don't really have anything else I wanted to talk about, so I think I'll just leave it off there. Thank you all for coming. Next week I'll have is Link long term for me? Link, yeah, I actually like Link. Link is one of the actually better coins because I quite like infrastructure coins. So rather than they don't need to fight anyone, right? They don't need to compete as much. I like Link, but this chart isn't too hot, right? Just to be honest. You got some support there, but this is like, you know, on the verge of breaking these lows. Probably put it there, but yeah. Link's chart doesn't look too hot right now. It has a bit more falling to go. Probably very least down to $4, $4.50. If not, take it further, maybe $3. This is gonna be like wait and see kind of thing. But I like the project behind it. Yeah, I don't like this chart for buying. To consider buying Link right now or wanting to be bullish on it at all, without it like first, you know, putting in a slow bottom or whatever. If I'm not trying to catch lows where it's likely to be a low, then I'd want to catch another breakout here. And yes, this is actually up quite a lot. I mean, that's 70%. I just don't think it's very likely that we see it trade much above it. But that is, I guess that is the range. You could definitely trade it. I mean, if you want to, I just wouldn't buy for long term, right? Because you got a very obvious range here, to be honest. So you got the central line there. I don't think this is particularly bullish, but you could, you know, wait for this to get a bit more bullish and then just stop loss below the wicks. Entry here, take it up to the middle line here. TP2 at the highs, and that's actually a pretty substantial trade, but I don't want to buy Link long term right now, but that is like a large cap that I would look at picking up once Bitcoin is put in an obvious bottom and alts start looking a little bit better. Yeah. Yeah, if there's nothing else, I think I will actually just leave it there. Go grab some soup. Yeah, if there's no other questions, Stampin'? Yeah. Thank you for coming, man. Next week I will be doing another session, but I'll go into specific indicators and how I might use them to build strategies. I mean, today I went very much over RSIs and divergences, but I got a few more interesting indicators we can go into and how you can turn those into actual strategies that work for